Hi everybody, Marco Carbajo here from businesscreditblogger.com. Today's video we're going to talk about how to get funding for your startup. In this video we're going to show you 3 fast and easy ways for you to actually get funding for a startup business, and more importantly we're going to show you how to exactly apply, what it takes to qualify for these 3 different types of funding, and how to get the money in 14 to 20 days. So by the end of this video, you're going to know exactly what to do to get funding for your startup in the next 14 to 20 days. And this is a cash injection or lines of credit or revolving lines of credit for your startup business. So let's get started. Now, what I'd like to do is first tell you why access to funding is crucial. Obviously, you're starting a business. You may have used up some of your personal funds already, or you're borrowing from family and friends. But one of the major reasons that startups fail is because they actually run out of cash. So what frequently goes wrong and leads to startups running out of money is that the owner failed to gain access to funding before the cash dried up. So it's important for you to plan ahead. So by watching this video, you're being proactive, which I want to congratulate you for that. I always tell our clients is to dig your well before you actually get thirsty. So the question is, how much money should you actually get? So it's important to think of not just the short-term needs that you have, whether you need to buy some equipment, purchase some inventory, or you got to hire some web developers. You also want to look at the operating capital you're going to need, any long-term funding you're going to need. So it's important to realize that you're going to get some unforeseen expenses. So you want to have a cushion as well. So remember, this is not, when you're looking for startup funding, you may think you just need a loan, but it's important to have access to working capital. And what that means is having access to money when you actually need it. And that's where we're also going to talk about the revolving lines of credit. So that's 3 sources we're going to talk about, 3 ways for you to get money for your startup. Best of all, in this presentation, we're going to show you how you can get all 3 if you want as well. So it's best to maximize the amount of credit and funding you qualify for when you're looking for startup funding. I always tell individuals looking for funding is to maximize your window of opportunity when you get funding. It's all about minimum input for maximum results. Because it's important to realize when you're applying for credit or getting funding as a startup business or even an existing business, banks will check your credit, and obviously you want to maximize that window of opportunity because you can only have your credit checked so many times. If you have lots of inquiries over the course of several months or a year, banks tend to shy away and will decline you because you have too many recent inquiries. That's why you want to maximize that window of opportunity. Okay, so you'll see on the bottom of this slide, businesscreditbuilders.org. That does explain a lot of our funding products that we have. But for this presentation, we're going to specifically talk about you as a startup. So it's important to understand, according to SBA, 75% of all small business startups get their money from loans, lines of credit, and credit cards. Okay, so we're going to talk about what's the first thing you should do as a startup business. Is it's important to realize that the 2 main things that banks or lenders look at is your credit, your personal credit, and your income. So what sources of income do you currently have? Do you currently have a job, or you have a W-2 income coming in? That's great if you do. Do you have rental income? Do you have some rental properties that are generating rental income for you? Or do you have retirement income? What's your source of income? That's the first thing you have to identify. How much do you make a month? How much do you make a year? Is your income verifiable? That's another important thing, because that'll allow you to determine, are you going to go for a stated income funding for your startup or verifiable? I'll explain that in a minute. But can you verify your income? If you have a W-2 job, that means you can easily provide pay stubs, W-2 statement. If you have rental income from rental properties, obviously you can show that through your bank deposits, your bank statements, that show your rental income coming in. There's certain types of like self-employed individuals, or let's say you can't verify income, you don't have any documentation to prove it, then you have to go through what's called stated income, and I'll explain that in a minute. So what are your credit sources? What's your credit look like as an individual? That's another major thing you have to determine right now. So you want to go to businessfundingengine.procredit.com. This will allow you to obtain a tri-merge credit report, personally. It's not a hard pull because you're ordering your own credit report. It'll provide all 3 credit scores for you because you're going to need this tri-merge report to submit for pre-qualification for funding. So it's important you know firsthand where your credit stands at. What are your scores? What does your credit look like? So that's mandatory. It only costs $1 to sign up for their service. I do encourage you to stay plugged into their service because they do provide you monitoring every single month. You can track your credit, the fluctuations, you're making pay downs, it protects your credit. So it's a great service, but you want to get your tri-merge report. Now that you know that's what your annual income is, verifiable, what type of income you have, and what does your personal credit look like, those are the key things. So with those 2 main factors, your credit and your income, we're going to share with you 3 sources that can allow you to get funding in 14 to 20 days. So option number 1 and 2, let's break all 3 down first. Option number 1 is going to be a stated income program. Okay, we're going to go over that next. So let's say you can't verify income. You can't provide pay stubs, you don't have W-2 income, you can't provide rental, you just can't provide income, you can't document it. So you're going to have to go through option number 1, which is a stated income program. I'll explain how that works. That means you don't have to provide any documents to prove your income. The second option, another funding source, is verifiable income. Let's say you do have W-2 income. Then you can also take advantage of option number 2 as well, and option number 3. So we're going to share with you how you can actually get all 3 types of this funding in 14 to 20 days so you can get the most amount of capital and credit for your startup. Okay, so you can use one option, you can use 2 or 3, you can use all 3, and we're going to show you how we do that with our funding program. Now, option number 1 is business credit cards. Now, obviously you see there's lots of business credit cards in the marketplace, but through our program, ours are different. Why are they different? Because they're specifically designed for startups like yours that allows you to build your business credit, because they only report the payment activity, the usage of this credit cards, only report to the business credit agencies. They don't report to your personal credit. So this allows you as a startup to protect your personal credit, because all the debt and new credit limits or any debt you carry on those accounts, none of it reports to your personal credit. Yes, you're using your personal credit to be able to obtain it. There is a credit check on your personal side, but as far as credit reporting goes, none of it's going to show up on your personal credit. So this helps you build your business credit. Also gives you access to, obviously, revolving lines of credit. Now, to qualify, you need a minimum of 680 FICO score with all 3 bureaus. Now, let's say you have a 650 or 640, you have bad credit. Well, we do accept credit partners. If you have a business partner that wants to leverage their personal credit to obtain cards for your company, then you can do that. You can use a spouse, you can use a family member. Now, what's required, though, is they do need to be added on your company. Not as an owner, they could be a treasurer, they could be a secretary, but it just has to show, and we'll show you how to do that, it just has to show on your corporate docs that they're part of the business. Now, funding takes 14 to 20 days with this particular program, and what you get is you get 4 to 5 business credit cards in the company's name. They only report to the business credit. These are completely unsecured. You get 0% intro APR for 6 to 15 months. So that gives you the ability as a startup to, if you have to purchase some materials, you have to purchase inventory, or you have to pay, let's say, some web development services, you're going to have 0% interest on those purchases for 6 to 15 months, depending on the bank. So you're going to have 4 to 5 cards. The beauty of it is the amount of credit limits you're going to receive as a brand new startup business with no track record, no revenues. You could get $25,000 to $150,000 in credit limits. Now, how do you get credit limits up to $150,000 as a startup business? What's being used is your personal credit. If you have really strong personal credit, let's say you have 700 credit scores or 730s with really great personal credit history, that's how we leverage your good personal credit in order for your business, your new startup, to get access to revolving lines of credit, because you're basically the guarantor. But like I said, none of the payment activity shows up in your personal credit. Now, this allows you to accomplish several things as a startup business. It allows you to create a credit identity for your startup. If you're a limited liability company or you're a corporation as a startup, this will create a credit file for your new startup. 4 to 5 positive credit lines are now going to be reporting on your startup's credit file. And this positions your startup for future credit limit increases. This allows your new startup to get a business credit rating literally within the first 30 days once these 4 to 5 cards report. So that already gives you a leg up as a brand new startup. You have 4 to 5 bank issued credit cards in your company's name. You have a credit file being established for your business credit ratings being established, and you have access to revolving lines of credit for purchases. So it's not a loan, these are revolving lines of credit. So let's say you get $50,000 in business credit cards. That doesn't mean you have a $50,000 loan. That means you have access to $50,000 in capital when you need it for your startup. So again, that'll give you a lot of peace of mind that you have access to that type of capital for the business. This also protects your personal credit. So this is option number 1. And this is really exciting for you as a brand new startup, because of the fact that you're going to be able to start building your business credit and protect your personal credit at the same time. Now, if you want to pre-qualify for this program, very simple. Let's say you just want business credit cards and you say, I want to go stated income, I have good personal credit, I want to get started. All you need to do is go to businessfundingengine.procredit.com. That'll allow you to order your tri-merge credit report. That's the first thing you need to do. You need to download your tri-merge report when you log into your account. And download it in PDF format, not HTML. That gives you an option. Make sure you select PDF, download it, save it on your computer. Then you're going to go to our website, businesscreditbuilders.org/pre-qualification. That's a form you need to fill out. Select business credit cards or business lines of credit. That'll allow us to know that that's the program you want to apply for. Upload your credit report. It's a secure site. Put in your information. When you submit it, you'll get an email confirmation from us, and we'll contact you within about 24 to 48 hours after our underwriters do the review on your tri-merge report. And just remember, this is not a hard pull. You're supplying us the tri-merge report in order for us to do the review. Once we do the review, we call you 24 to 48 hours, go over the funding projections, how much credit limits you qualify for. From there, if you want to move forward, we send you our agreement, and then we assign you a processor once you submit your agreement. And then the process takes about 14 to 20 days for you to receive your business credit cards in the mail. Okay, it's that simple. Now let's talk about option number 2. Option number 2 is a verifiable income program. What that means is if you have W-2 income, you can provide pay stubs, or you have rental income, or you have retirement income. As long as you can document your personal income, then you could go with also a verifiable income program like bank lines of credit. Bank lines of credit are really exciting. Now, these aren't business lines of credit. These are individual bank lines of credit at the bank. They're not credit cards. They're lines of credit that the bank provides to you, which gives you check writing privileges. You could draw on your lines of credit. What's powerful about these is the fact that the scores, 660 FICO scores, is the minimum you need to have. Funding takes 14 to 20 days. But this allows you to draw on your line of credit up to 100% of the credit limit that the bank provides to you. You can use your checks to draw on your line of credit. You can do a wire transfer. You can go online and do an ACH deposit into your account. So that's what's really exciting about bank lines of credit. You can get 3 to 6 of these set up, and you're looking at credit limits at 25 to up to 300,000. But typically banks will only go as high as 50,000 per bank. Most we've seen is banks nowadays are issuing anywhere from up to around 30 to 40,000 per line of credit. So imagine as a startup business, you can get 3 to 4 business credit cards, and let's say you also can do this program and you get maybe 1 to 2 bank lines of credit, and you have your interest rates on these particular lines are 7 to 12%. Your flexible minimum monthly payments are 2.5 to 5%, and it's completely unsecured. So this gives you as a startup a flexibility. You have business credit cards you can use for purchases. You have some bank lines of credit. Let's say you need to draw large lump sums of cash. So that gives you that flexibility. And that's why diversity of how you have access to capital as a startup gives you choices, because every type of funding vehicle that's available has a purpose, and it has it's designed to serve a specific need. So when you have that diversity as a startup, then you have more choices. Okay, so for this particular program, if you only want to apply for bank lines of credit, you can go to businesscreditbuilders.org/bank-lines-credit. Now it's the same process. You also need to try and merge report from this. You still go to the same pre-qualification page. all you're going to do is select bank lines of credit if you want to apply for this program. But don't go there just yet, because remember, if you have good personal credit and you have verifiable income, you actually can utilize all 3 of these funding options, or 2 of them if you want. So let's go over number 3. Number 3 is an installment loan. So this is a lump sum, a cash injection into your bank account. So this is also a verifiable income program. So you have to be able to prove income with this funding program. You have to have either W-2 income, rental income you can prove, or even if you have to provide tax returns that show personal income, you just have to be able to document your income. Minimum 660 FICO scores. Funding takes 14 to 20 days for this program as well. You're going to get 15 to 300,000 in combined loans. Now, what does that mean, combined loans? The beauty of this particular program is in this funding cycle, we give you loan offers. That doesn't mean you have to accept the loans. You get presented with anywhere from, let's say, 3 to 4 loan offers from the banks in our network. We have over 400 banks, credit unions, and lenders that we work with, but we only present you to the banks that we know will give you the best offers, the best limits, and these are soft pulls. These aren't hard pulls for this particular product. So you're going to get 3 to 4 offers, and you can accept or reject those offers. So if you accept an offer, then the funds will hit your account within a matter of days. And what's interesting with this particular option is the fact that you have a lump sum of cash available to you, and you have good interest rates, 6 to 12%. Repayment terms are 2 to 7 years, and these are completely unsecured. So for this particular product, if you want just a loan, then you can go to businesscreditbuilders.org/business-loans. Same process to pre-qualify for this program. I'm sure this is a little repetitive for you, but you need to get a tri-merge report. You go to our pre-qualification sign-up page. You'll get results in 24 to 48 hours. Just make sure you select loans if that's the option you want. But here's what's exciting on how you can maximize your funding as a startup. Like I said before, when we take you on as a client, if you want to do all 3 rounds of funding or 2 rounds of funding, you can do that if you qualify. That's the key, though. You have to be able to qualify for these. So if you have good personal credit, good utilization on your revolving credit cards, and what I mean by that is if you're under 50% on your personal credit cards, that's good. You don't want to be maxed out on your personal credit cards. But you still feel free to submit your pre-qual. It's free for us to do a pre-qual to see which funding products you qualify for at this time. So funding round number 1, let's say we do the review. We come back with a projection for you, and let's say you qualify for business credit cards, loans, and lines of credit. So you can select and say, yes, I want all 3 of them. And that'll allow you to maximize your funding potential as a startup. So funding round number 1, what we do is we present you with some loan offers. So let's say you accept 1 loan offer. You say, I like that loan offer. I'd like to get that cash loan. Let's say it's $10,000 at, let's say, 7% with a 4-year repayment. You accept that 1 loan offer, cash is deposited in your account. Now you have a lump sum of cash in your bank account. And let's say you're ready to move on to funding round number 2. We go on round number 2. And this is all done in less than 30 days, just so you know. This is a very fast funding cycle. That's why we maximize that window of opportunity for you. So round number 2, what we do is we set up the bank lines of credit for you. 1 to 2 of those lines of credit. And that'll give you access to, let's say, an additional 30 or 40,000 lines of credit. I'm just throwing up some numbers here. Depends on what you qualify for. But now you have access to lines of credit, all right, as a startup. And then funding round number 3, we go through business credit cards. This is where we set you up with revolving lines of credit, business credit cards for your new startup. So at the end of the day, imagine you get a lump sum of cash in your account, you have access to some bank lines of credit, you have some business credit cards, and you're a brand new startup business that has all this diversity, and you're building your business credit. So this is the ideal scenario if you want to take advantage of it. Or you can choose 1 or even 2 of these options if you qualify. So with that, make sure if you want some additional information, go to businesscreditbuilders.org/prequalification. If you want to pre-qualify for any of these programs, it's absolutely free for us to do a review. You're supplying us the tri-merge report. Just go to businessfundingengine.procredit.com. And there's no obligation for you if you want to know what you qualify for. But keep in mind, if you're really looking for funding, once we do the review, you have a window of about 3 days to submit your agreement to us. because those projections are only valid for about 3 days. So I always tell people, if you're ready to move forward, only submit your report to us for pre-qual if you're really serious about getting startup funding, okay? Because once you get pre-qualified and we give you a funding range, you're limited to amount of days that you can move forward. Otherwise, we close your file, okay? Because there's a window of opportunity to get this funding for you. Now, you can go to businesscreditbuilders.org/prequalification to fill out the pre-qual form. Now, what I'd like to do is thank you for listening to this presentation, and I want to congratulate you for starting your business. And if you like this video, feel free to click the like button, click subscribe. As a startup business, you'll get ongoing notifications of videos that we post like this to be able to get access to different types of funding as a startup, how to leverage your good credit as a business owner. We're going to provide different funding vehicles. So that's the type of information we provide you on a regular basis, so you can maximize your funding and you can really focus on your business and not so much focus on capital. Our goal is to make sure you maximize your funding opportunity as a business owner. So with that, make it a great day. We'll talk to you real soon.